fundamental markets are in for a $1.6 trillion liquidity crunch. Yes, this is something that a lot of people are not warning about. We've seen a little bit of recovery here recently over on the Bitcoin chart post the debt ceiling resolution, but the reality of the situation will now come to bite. We are in a situation where the Treasury Secretary Janet Yellen must now start to replenish her depleted bucket of cash to fill it back up again so the US can pay their debt obligations. And how will they do so? They're going to do so by upcoming issuances, yes, which start to kick off in the next 2 days. For those who aren't familiar, governments issue bonds of various different maturity lengths, and that is how they get you and the markets to give them money. They give you a yield in return. So if you look at previous auction results, you can see the different rates of return you get for giving the government your money for these maturity periods, and that is how they take liquidity out of the market, which could have gone into Tesla or Bitcoin or altcoins or any other investments, and instead the government takes it to pay off their obligations. Now, why is this important for us? This is important for us because if you see here on the Bitcoin monthly chart, and I lay over the liquidity index, Bitcoin is correlated to liquidity in the market. When liquidity comes in the market, Bitcoin, of course, does well. When we're stimulating the economy, putting money into the economy from quantitative easing or loose monetary policy, Bitcoin benefits from that. But it's not just the US, it's global liquidity. But of course, US is one of the primary markets, and it looks like over $1.6 trillion is going to be needed over the next period of time to replenish what they need. So there's going to be a lot of issuance going on here, and that is going to have an impact on the liquidity in the market. Check out this clip here.
Some people may call it a soft landing. I call it stagflation, right? At the end of the day, the Fed's in a box. They got a tough situation here that's bad for liquidity. That's overarching over the top, right?
You said the magic word, liquidity. And I know in my house, when the liquidity gets bad in the kitchen sink, we get Drano. Okay? Well, I think Janet Yellen's going to have a Drano issue because many see as much as 1 to 1.6 trillion in bill issuance coming. And right next week alone, 100 billion in bills for cash management, 123 billion for 3 and 6. You have 4 and 8 week bills, what, about 100 billion. You're looking at close to 300 plus billion. But of course, not all of that is new. But where is it going to come from?
Draining the TGA at the end of the day is borrowing from the future. That's what we did. We pushed a bunch of liquidity into the system. It counteracted QT. But guess what? QT is still happening, and now those flows have to flow out the other way. 1.4, 1.6 trillion coming out. That's direct, out of the veins of the market.
Oh, yeah.
And
it could come out of banks. It could come out of the reverse repo market.
Correct.
Could come out of the money markets. But you're right. No matter where it comes from, the issue is the same. We need to replenish the Treasury General account, and we all know it's coming.
It's coming. In the meantime, shorts are going to get squeezed. A lot of the time, the way these things end is with a blow-off top.
So that now leaves us in a tricky position here on Bitcoin. If you take a look here at the monthly chart, if I pull out the EMA ribbon, you can see over this last horrible month we had, characterized by the debt ceiling in May, we were coming in to retest our monthly EMA ribbon. Now, you guys know I don't normally look at the monthly chart, but I did just want to look at it for perspective here, because we are coming into a sideways territory, and that's maybe what we could be going into. We could just be going into a period of sideways consolidation, because if we're unable to break through 30 and 31, which so far Bitcoin's not showing any impetus to do just yet, maybe we're going to be set for a couple of months of boring activity. When we drop it down to the weekly chart, we do have a little bit of hope, right? We have last week managed to bounce off our EMA ribbon. We then followed it with this week, which was red again. But we need the momentum, right? We need the momentum to break past 30, to break past 31. We can't just spend time going sideways here, because that shows that the bulls aren't ready for an extended move. It shows that the bears aren't really ready for a move to reclaim the EMA ribbon in their direction down here. And so we're kind of at this stalemate where markets are just waiting to see what happens. But if you look at the catalysts ahead, what are they? The first one we've got is our next FOMC meeting, right, which comes on the 14th of June. Markets are now pricing in a pause. Now, what is the basis of that? I covered that off yesterday. Make sure you go watch that. Markets are deciding to take certain data in a certain way. So on the one hand, if you want to take the data which says, we're going to get 25 basis points, you should look at the hot PCE data. You should look at the JOLTS figures showing that there's still so many job openings and labor and supply and demand are not in balance just yet. You have to look at the non-farm pay payrolls. But if you want to look at this side, which then says, oh no, we're okay, we can focus on these positive points of why we could get a pause, they're focusing around the fact that the average hourly earnings did go down year over year, and also that the unemployment rate ticked up a little bit more than expected. Either way, I think you can make the argument that the Fed could possibly go for a 25 basis point at the next meeting. Now, of course, you've had certain Fed officials come out saying we need to have 25 basis points. You've had other Fed officials come out and say, oh, we could pause and see where we're sat at. But right now, given where the market is today, around 10 days before the next meeting, if this stays as it is and then we see a 25 basis points, the market's going to have to go down to price that in, okay? Because they're currently pricing in a pause. So they're going to be shocked to the downside if we do get that 25 basis points. The other fear right now is that we could be entering a period of stagflation. Stagflation is when you have high levels of inflation, you have inflated levels of inflation, but you don't have the economic growth to accompany it. So you have rising unemployment, you have tighter job markets, but you have lower growth, right? That's the key. You have low growth, yet inflation is still quite high. That is stagflation. And that's a worry for markets. And that's going to continue to be a backdrop over the next few months here of is that what's happening? Because currently, we're not directly at risk of entering a recession because you can see that the labor market is still pretty strong. So that then brings us on to the technical levels here in the chart. And if we're sitting here in the chart, you can see that Bitcoin did manage to create a floor around this 26.2, 26.3 level and said enough is enough. It then had its move up. But subsequently, after the Sunday, we just had a week of downward movement. And this is not exciting, right? If you were falling from a symmetrical triangle, you fall to the downside. When you're ready to then move, you want to see a big tear off all the way up here, like a blow off bottom, which gets you a big move to the upside. So this has been lackluster here by Bitcoin, showing a lot of weakness. But similarly, it's not like the bears are taking advantage of it and saying, oh, we're going to take this opportunity to go down to 25,000. No, they've not managed either. So we're in a proper stalemate here on this chart. Neither are we showing enough momentum to move to the upside, neither are we showing movement to the downside. If we take a look at this downward channel, you can see we're clearly still in a downward channel, right? What characterizes a downward channel? You have lower highs and lower lows. Lower high there and another lower high, and you're getting lower lows. So you can clearly see that what's going on here is that the bears are still in control, but just ever so minutely, right? We're still in our downward trend here. And what the bulls have failed to do, if you look at this channel, big move here to the top side, bottom to the top side. When it moved from the bottom here, it didn't even get to the top side. These are all the things I'm noticing in terms of divergences in the chart, where we're seeing weakness in the charts, right? Yes, we bounced from the bottom here, but why could we not at least go to the top there before coming back down, right? And then creating something like that and getting out. This shows you that you're more likely to show weakness to the bottom direction and do something like this. So these are the things that are starting to worry me. And the reason this channel is so important, remember guys, is this is the handle from our bigger cup and handle pattern, which gives us a price target of 45. So it's in all of our interest, from a bullish perspective, that Bitcoin holds this cup and handle pattern, holds this channel, breaks to the upside of this channel, because if we can clear 30 and 31, price targets brings you into 45. But at the moment, we're not looking good in this handle right here. Now, of course, that can change very quickly. We can have a really powerful week this week, and markets can quickly push out of this level, go attempt to fight at 30 and 31, and off we go. But that gulf has to be filled between here, where we're sat now at 27.2, up until that 29, 30 level. We need some momentum behind us in order to go mount an attack there. If you look at the RSI here, you can see the RSI is trending downwards as well, right? Just like the price action, RSI is trending to the downside as well, showing that we are in a downtrend. Guys, if you're interested in learning technical analysis, you want to learn head and shoulders pattern, you want to learn cup and handle pattern, the EMA ribbon, all the things we go through in our day-to-day videos, if you just want them to make sense so that you can actually trade on the back of it yourself, check out my TA course, ijaz.uk/TA. This is going to be a lifetime purchase for you guys. Anytime I add any future lectures, you're going to get it at the current price, which is locked in, and the price is only going to go up from here. So make sure you get caught up on that. It's built from beginners into intermediate and advanced, and we're going to keep adding more and more advanced lectures in this. We're really leveling you up over a period of time. And just to freak you guys out a little bit more, I was looking at this data, which didn't give me much hope for June as well, but I was looking at the different months, and I was looking at the months here on Bitcoin's returns where we had a negative May, because we just posted a red May. And I wanted to see what tends to happen in June. So if you look at every time here, if we start from 2013, a 7% downside here in May, followed by 24% down in June, right? If you look at this one in 2015, it was the only time we've had a negative month in May of 2.5%, followed by 15% in June. I'd take this scenario, but look at the other ones. 18% down in May, 14% down in June. If you look at this one, 35% down in May and 6% again down in June. 15% in May and another 37% in June in, of course, 2022. And now we look set for our June, where we're down 6.9%, call it 7% in May. Can we deliver a green June? The other thing which is a little bit concerning is when you take a look at holistically the volume we are seeing here on Bitcoin. Now, of course, you guys can feel it anecdotally. People just aren't hyped up about the crypto space anymore. Your Uber driver is no longer talking about crypto. The person serving you a takeaway is no longer talking about crypto. The tourists have kind of dissipated. Now, of course, there have been certain months this year, particularly January when Bitcoin rose 40%, and then March where Bitcoin rose 23% along with meme craze as well, where people jump back into crypto for a little bit. But when the memes have disappeared, generally people have jumped back out. And that's normal. When Bitcoin shows the initial bit of pumpability, you'll quickly see the tourists funneling in, bringing in the volume. But if you look at it so far, if you look at January, which was one of our better months, up 40%, the volume on that was 66 on the reading, right? If you look at then March, the next month where we moved quite powerfully, that was at 120. But compare these candlestick volumes to the kind of candlesticks we were seeing in April of 2020, right? If you look at April of 2020, when we started creating the early signs of that bull run, you could see that on this we had 180 in volume, right? The month after that, 185, and then you start getting to your skyscrapers where it's 243. So we're just kind of nowhere near there. We need at least, a 50% more volume in these levels to get some serious momentum here in Bitcoin. So we definitely know that we still have like some cobwebs of the bear market still here. There's not that full excitement just yet. Yes, it's much better than the end of last year where we had FTX and all the drama around the crypto space, but it's still there. There's still that feeling there. There isn't that excitement just yet there in the markets. Here's the thing, guys. Who needs the excitement? The beautiful thing about investing and crypto is you want to be doing it when the mass aren't doing it. You want to be DCAing when others are not talking about it. And the longer I look at Bitcoin, spending time below 30,000, I cannot help but to think, hang on a sec, guys. Once this breaks through 30, are we not pretty much confident that we're going to quickly get to 40 and then 50 and then 60 and back to all-time highs? And in which case, why are we not going to be kicking ourselves to say we didn't DCA enough? Every single cycle I've helped crypto through, I've never felt like I've done enough. Even though I've always done my best, I've always made sure I've got as much cash as possible to put into crypto. But every time when Bitcoin the previous time got back to 69,000, you have that feeling where it's like, I just wish I bought more at those lower price targets. And it'll be the exact same in this next cycle. Let me know, guys, what are you doing here in this crypto market? If you appreciate these updates here on a Sunday, let me know. Smash some likes. Don't forget to go watch this how to trade video here, where I give you the exact tips and strategies, plus the tools and templates for how to trade like a crypto pro in no time at all. And I'll see you in the next one.